Hey guys, welcome back to Your Nifty Guy. I hope all of you are doing well. So today's market moved in a very controlled, muted manner. There weren't many clean intraday opportunities, and most of the day was about reading structure rather than chasing moves. These are the kind of sessions where discipline matters more than execution because forcing trades in a slow market can do more harm than good. In today's video, I'll walk you through exactly how the market behaved, which zones acted as support or resistance, how buyers and sellers reacted at key levels, and why the price action stayed tight for most of the session. We'll use this context to build a clear practical trade plan for tomorrow so you know exactly what to watch and where the higher profit setups may come from. Before we dive in, make sure you like the video, subscribe to the channel, and share it with somebody who trades Nifty. All right, let's get into the charts and decode today's price action. Markets today opened with a slight 30 odd points gap up, immediately went into a selling zone, right? Formed a base around here, started moving up. Now, I did not trade this particular setup because this is a clear no trading zone for me, like I have mentioned in the video yesterday. This entire high, this entire low, there was a lot of volatility and low momentum, and this entire zone was treated as a no trading zone for me. We only wanted to go long above this particular high. With today's opening and the first 5 minutes candle, I had given up on hopes of finding a good trade in the day, but I still managed to find one good trade with all the valid confirmations and confluences, which I will share shortly. But then again, this particular trade was not taken by me. I absolutely don't, just because the market was in a no trading zone for me. Had it breached this particular low, had it reached this particular support level and then formed the base, it would have been a good long trade. But for me, this was not a good enough uh, structure to trade the reversal patterns that we do, right? Like we did. Yes, like we did, or we traded this particular reversal on this day, which was formed at a support zone, right? So where are we forming those patterns is also equally important. Although the move came in, a good amount of move came in from this particular point, a trade could have been initiated at the break of day's high, which was also open. So this is the flat head candle, which shows the presence of sellers right from the start. But then I refrained from taking this trade simply because it looked like a low probability trade to me. Now, post the breakout above yesterday's high, all we needed was a pullback to get into the trade. But then again, if even if market would have given a pullback and retest around here and continued, I would have either entered with lower quantities. It was not giving the confidence because of the point from which was coming from, right? It had already traveled quite some distance, and that was the reason. Again, I was not looking at creating any long trades around at this particular price point as well. And as you can see, the price action was quite sluggish after the breakout from above yesterday's high. Market spent a lot of time around in a sideways, and while price was creating higher highs, RSI was continuously creating lower highs, right? So there was some clear exhaustion in the uptrend that we could see. But then again, to for us to be able to trade change in structure or absolute move on the downside from here, what we need was a clear change of structure. And of course, that could not have been traded in this particular move, which also, if anybody would have traded, you can see equally market reversed immediately, trapping all those who would have shorted around here. Now, there is one thing which I always keep on doing is switching between multiple time frames and try to see if I can find more confluences or more evidence so that I can take a much more informed decision or informed trade. And on 15 minutes time frame as well, while this high was created, I could see that apart from the 5 minutes since yesterday, uh, this high, if you join all these highs, market or the spot was making new highs, whereas RSI was making new lows. So there was a clear divergence on the 15 minutes time frame as well, and this looked like a good double top pattern. You are also not only simply getting a double top, this is also a breakout of previous day's high, and then you are going back inside the previous day's range, right? So This is the only trade that I had taken. I and did the analysis on both 5 and 15 minute time frame, but then I entered on 5 minutes time frame. This was the entry. Stop loss was a bit on the higher side. This was the most logical stop loss. Of course, nothing could have been done about it. And plus, this was a trade which is contra to what the major trend is right now. So our bias is on the bullish side. So of course, I entered this trade with lower quantities than I would take trades on the long side. I entered at this particular point with stop loss being around here, like I said, and this was the green candle at 215 was the exit for me. It fulfilled all the conditions. The high was higher than previous high. The low was higher than previous low, as well as we were closing above the previous candle's high, right? So this is the trailing method that I use candle by candle of exiting the trades. And this was the exit candle for me. I captured around 19 odd points in this particular short trade. Post this again, there was nothing to be traded, no setups, no trades, right? The market was kind of frustrating because you could see the market moving up around here, but then you could not participate in this move because the levels are not perfect. Again, there are things, markets will move a lot, and sometimes it will not move as per your analysis or as per your plan. But that does not mean that you have to jump the gun or you need to rush into finding trades, right? So that is a mistake that all of us do. So in case, see, uh, I believe everybody should have a clear set of written rules for entering, exiting, managing, trailing, everything, right? That all the components that goes on to make that perfect trade. And once those rules are written for you, once you have already planned for your day, planned for your upcoming session, you should stick to that plan. So, like I said, I could see the markets going up around here, but then again, I did not participate, and that was completely fine. And once I could see that this move is getting exhausted, coupled with the 15 minutes confluence, uh, the RSI divergence being present on both 5 and 15 minutes, and 15 minutes showing a good double top formation. This is where I managed to take a small scalping trade on the short side. So that was it about for today's trade. Let me know how your trading day went. Now for tomorrow, we don't need this and this. On the 75 minutes time frame, a new high has been made, and of course, the 75 minutes time frame swing that we used is not valid for us right now. And we can also see kind of a double top formation taking into place on the 75 minutes time frame as well. On the daily time frame, it will be a doji. Of course, it's a doji that has formed. So now what we'll also do is we are getting a clear swing on the down and a clear swing on the up on the daily time frame, right? So this is the daily time frame fib level. We have marked it on our charts, right? So markets have markets have not yet breached this particular high, but then again, even if it has to retrace and then continue the journey up, this is something that we need on our charts. On a 4 hour time frame, also again, there is a scenario of a double top. So maybe we'll give a breakdown of this level, come back, retest those and these levels, and then we continue the upward journey. So that is something that we'll decide once we come to it. For now, I'll keep the trading plan for tomorrow. Very, very simple, right? 26,000 is also again a round number. So we have taken rejection from a good round number as well, which round numbers usually act as good supports and resistances based on where you're approaching them from. So this here will be a signal to go long. I'll wait for the markets to break down below previous low. This will be the trade to go down short around these levels if we find a good support. We are going long. Needless to say, below this daily fib level, we can plan a short entry or short trade once again. So again, I believe the market is behaving in an irrational way. It is near all-time high, of course. A lot will also depend on the Bihar election results. Uh, and US, right? The government shutdown in US has also been called off today. The government is back working. So all the data which comes in from US, the job data, the non-farm payrolls, inflation data, everything which was not being released for quite some time. This was the biggest shutdown in the US government. That will soon be that will be getting released now. So again, how all those data comes in will also have an impact on how we move. So what we'll do is we'll take one day at a time, right? One day, take into consideration the smaller price action, pay a lot of attention to what is happening, where buyers or where sellers are getting trapped and trade accordingly, right? So that wraps up my today's breakdown. Even though the market didn't offer many clear trades, days like this helps us sharpen our discipline and prepare for when momentum truly returns. Keep your levels marked, stay patient, and let the market come to you. That's where consistency is built. If you found value in this analysis, don't forget to like the video, subscribe to the channel, and share it with your trading circle. And as always, drop your questions or views in the comments. I'll see you in tomorrow's video with the next trade plan. Until then, trade safe and stay disciplined. Cheers and thanks for tuning in, guys.